Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room, live streaming from TicketTalker. We got certainly a lot of volatility this morning, particularly in precious metals here. You see gold trading 1785.50 up 1040, silver at 2754.50 up about 47 cents. We are looking at an increased level of volatility, unprecedented volatility. We had pretty much a short selling attack, you might say, last night at about 3:45 p.m. Massive short selling came in and pretty much broke the market from about 1773.50 to a low that was made of 1759. This was right after the daily session. Now, as we came in, we in fact, if you take a look at yesterday's or any of my videos there, I comment quite frequently that the area in blue represents a very high probability area mathematically that we can expect a reversion to unfold from there. In fact, we published a report in Seeking Alpha suggesting anybody that is in a short position, short hedges, these are the levels that you want to cover those short positions. And so what we saw here was the market come down here, but could not even come down to the buy two level of 1755 and reverted right back up and found buyers immediately that took all this selling pressure that was laid upon us or laid on the long side of the market. That supply was strong enough to revert the market even higher than previously before the collapse, until the buying overtook all the supply that has been offered at this price level here and broke out decisively, as you see here, through the monthly mean of 1781, the annual mean, and the daily mean of 1777. Getting through these levels is activating a short-term, intermediate to long-term buy trigger, as you can see here. And the daily automatically activates the target of 1787, which just has been completed with the high that we saw here at 1790.90. And we recommended at this point, particularly if you bought it down here at 1765 to 1787, take some profits. You want to use the volatility of this market to lock in profits of $20, $30 if you are trading the market, particularly day trading the market, this is probably one of the best environments to use the VCPMI. The market is in an area where you want to take profits. We've made about 4,300, and we're going to suggest to take some profits here. If you bought it down here as we recommended, and pretty much this is what we have netted per contract. $4,320. So if you follow the signal, or if you are one of my traders in the Discord room and you saw this, you took it, by now, the AI basically activated a very strong buy signal here by closing above 2679. That in fact was a harmonic level. I mention and talk about this relationship to be the optimal relationship for self-directed traders to identify entry points, exit points. And so, this is a nice trade from 2679, but it came down even to activate the weekly signal of 2619. This was just an incredible amount of manipulation. This is what you call sheer manipulation. At 3:45, when the US market was closed, massive short selling came in that collapsed the silver market down to 2610. Now, this is what I believe the longs are fighting against, is this kind of predator selling that takes place during the vulnerable time frames when there's no one around. But what it did is it came down again into these blue levels that I keep mentioning, which identifies the highest probabilities to execute a trade. It took out all of these prices and reverted right back up, activating a buy trigger, a buy signal, confirming this signal to be of high probability. And at 9:30 p.m., it just unfolded into the uptrend, into the buy trigger that activated the target right away that already was in place at 2719. Target completed at 12:45 a.m. And I think this was what kept me up. I woke up and, it's one of those things where I'm seeing a lot more activity on the Globex at night, sometimes than the US markets. But European buying took the market at 2610 into strong hands. This is what is important to get out of this, is the fact that no matter how much they are trying to manipulate the market, they can't break the market. And what they're finding is a huge amount of buying interest, like you see here. And the market now is in pretty much obviously the extreme above the mean, completed the sell one target of 2748, but the second target daily is 2788, and the weekly is 27.89. So if you noticed, 27.88 is pretty close to the weekly 27.89. So I have my eyes set on these levels here to take additional profits. And it's a high probability, more than likely, that if we do get up there and the energy does bring the market up there, that is pretty much going to be the first ceiling of resistance in simple language. And the 27.88 being the sell 2 level, if the market closes above, then this level would become the support. When the market closes above the resistance, it becomes support for the next fractal in price or the next target above, which is the 28.45. So the first thing that we want to do is see, first of all, the behavior of the price in the market here, where the algorithm begins to identify a probability of the market gotten overbought, you might say, or we are going to see an exchange of supply and demand take place here. So we're going to have a little bit of a tug of war between the shorts and the longs up here. And once again, if the buying demand underneath the market is able to take all the selling pressure as it appears it is, the targets above already are in place for us. If you're a short-term trader, to lock in your profits, or if you're a swing or position trader, depending upon your profile, your positions, you can recalibrate, you can adjust. Because if you bought it down here, or if, obviously you have a nice equity built in there. And the thing that I want to comment here for my traders here, particularly in my private trading room, is that what in sharing with you here in this live streaming is that what I'm noticing here basically is that most of the activity, once again, is taking place in the Globex. And it really doesn't give the U.S. trader, at least in terms of the derivatives, any opportunity to protect your position or to take advantage of the market, unless you're trading Globex, and pretty much the only liquid instrument in that I feel, at night are, the gold, the silver, the mini S&P, the indices, crude oil. Since I mentioned crude oil here, I want to take a look at the energy markets here for a minute, that we seem to be experiencing what people are using now is the favorite word of a short squeeze. Based on the weather in Texas, it appears that supplies are just obviously have been literally eliminated out of the market, which is what's putting the pressure on crude oil. And what we're beginning to see is pretty much the supply chain being exasperated, you might say, on top of a pandemic. Their electricity is out. They have no water, or in some places, partially. So it's an unfortunate situation, and it it really my heart goes out to those people there, particularly that they're not prepared for a winter storm. It's an unusual event and a serious one. The grid is broken, and so here's an example of what can potentially happen to the United States on a national basis. We seem to be dealing with a lot of vulnerabilities in the system, physically, economically, and obviously from a health point of view. We're dealing with the pandemic still, and the thing, the kind of echo that as a self-directed trader, I'm beginning to focus out of all the chatter is the reality that we are entering what could potentially be a major problem with supplies in general. The supply chain has been broken by the pandemic. You see in now what's happening to crude oil. Grains are going through the roof. And our, leaders are telling us, I don't know what to call them anymore, but our leaders are telling us, don't worry, inflation is not a problem. It's short term. This is all short term. This is all going to go away. You remember that? It's going to go away. It's going to disappear. I don't think we're dealing with the reality is that things are different this time around. We've never been in this situation. It's uncharted waters. And so a lot of money is going into Bitcoin. Trading almost at 55, 56,000, which is pretty much, I think, the mark where the gold market could have been if we didn't have a virtual currency. I think we could have been looking at 50,000 gold. But now we have this virtual currency challenge competitor unleash, you might say, this tremendous psychology that essentially does not trust the US dollar anymore. This is, what's going on with Bitcoin, in my opinion, is basically people that are looking for an alternative to the US dollar. And, it's not a currency, but it is a virtual asset. It's an incredible trading asset if you can manage the volatility, but it is not a currency. And I think in some way it has affected the psychology, you might say, of gold, silver, precious metals. But once again, going back to the basic law of economics, of supply and demand, we seem to be experiencing a shortage across the board potentially. And we're starting with crude oil. Obviously, now, we're moving into a shortage in the silver market, the metals markets. Pricing 1,000-ounce silver bars or gold are, they're pricing gold at $70 above spot. Very similar to what we saw back in March. I think, again, the difference is that it caught everybody by surprise, so they dropped the market 300 points, but the market rallied $600 after that. And I truly don't think that's going to happen again. As we saw yesterday, it made a low of 1759. It came below a 50% Fibonacci retracement, but it came right into the pocket of the VCPMI, identifying a very high probability that this is the area where we could see a reversion unfolding, and we did. It unfolded from the extreme below the mean to the extreme above the mean. It ran from 1759 59 to 79.80 within the blink of an eye. So we are, to talk about the market in terms of how we trade it, we are in a bullish mode right now, trading above the average prices, trading above the weekly, trading above the monthly by one level. We're holding a long-term, long core position. But we are trading actively short-term. We were fortunate that we did catch this correction, and it was before when we got this signal here, and took a risk. The market failed. And we saw supply come in. But this action here from last night is an indication that buyers are coming in at higher levels. And so the question that we have now is whether this 1759 is going to complete a lot of different patterns, including Elliott wave, I believe was the completion of this corrective wave. So we're going to continue to hold, obviously, our long position, our core long position. And now we've locked in, over 80 cents on silver for us. And let's just see what the market wants to do here. And we'll go with that. Let me go back to the silver here, which is the one that I believe is taken the limelight in this rally, and it seems that it is leading this rally. This is a phenomenal move from a low of 26.10 to a high of 27.71 just overnight. This is just incredible volatility. So we rest a little bit here, we hedged a little bit here, we took profits, we locked in all this big move down here, and now it's telling you, to go short at 27.48. But the thing that the VCPMI is able to identify, obviously what we're looking at is the momentum of the market, not the price, but the momentum of the market when it unfolds, what it does. What it should do is it should accelerate like this. That's the momentum until it meets the target, which was in place even before this move began. When you get to the target, like a GPS. It's telling you park, rest, breathe, take your profits a little bit. You can leave some on the table if you have multiple positions. And the next target is 27.89. If we get above 27.48 again, this is the area identified as distribution of supply. But we are in a just explosive market here, in particular with the silver market, because one of the things that I'm beginning to see in the cash market here, if I can just comment about that, is first of all, there is a shortage of supply. You can't get silver or gold without paying a big premium, in some cases 8-10%. And at some point they were charging, at the peak of the silver, I think it was about almost 50%, which was a ripoff, obviously, a $30 silver. So I think what's happened here is that the Reddit crowd, obviously the Wall Street bet crowd, has certainly put the limelight on this market for a couple of reasons. Because it is being squeezed, it is being on the short side, it is being manipulated. When you take a look at the commitment of traders report, the short side of the market, the short sellers are commercials, under the category of commercials, which are, in my opinion, not just banks, but major short players, like some of these tech companies that are using silver now more than ever to create their products. And talking about a shortage of supplies, according to CNBC this morning, we have a serious problem with chips, making chips for the auto industry, for Intel, high-tech companies. Isn't that a coincidence that on the face of what we're hearing is that literally there is no physical availability unless you pay a lot of premium or you wait a long time, that all of a sudden we're beginning to get a shortage of computer chips. Silver is one of the elements that is used in making computers, solar panels, computer chips. The application by industry is probably one of the biggest demand factors. And I believe it's about 30% of the demand factor. And according to kitco.com, we're beginning to see a shortage of the 1,000 ounce bars, which primarily are used by industry. So I think the fact that the industry is beginning to experience shortages as well, it may be that this is the one factor that essentially could turn the scale on the short sellers, and we literally could see the price revert to its mean. With that, we really don't know yet. In fact, the price discovery is skewed with silver and gold because we really don't know. I want to share this article that we just published in the Associated Press. Silver, industrial demand holds the key to the short squeeze. Central banks and hedge funds still have a massive short position in the COMEX exchange, which exceeds 38 billion. A shortage of supply of gold and silver, especially for large deliveries, is increasing. The catalyst for this market exploding to the upside is not Reddit or Wall Street bets. It is that industrial demand might panic and begin to buy everything in sight. Central banks and hedge funds still have a massive short position in the COMEX exchange, which exceed $38 billion. They have not decreased their shorts. The market will go against these short positions. There is a shortage of supply of gold and silver, especially for large deliveries. The 1,000-ounce silver bars, which are used for industrial uses, seems to be getting in short supply. The catalyst for this market exploding to the upside is not Reddit or Wall Street bets, is that industrial demand might panic and begin to buy everything in sight under fear that we are running out of metal supplies. The pandemic has destroyed the supply chain as we knew it. Commodity prices are exploding, including grains, crude oil, and metals. They form the roots of inflation, which as we begin to normalize the economy, the velocity of the demand is going to trigger price inflation for consumers. This is similar to the 1970s when we came off the gold standard for the US dollar, which began its devaluation. Inflation ran into double digits through into the 1980s, and gold was at over 800 an ounce, and the Dow was at 1,000. The stock market is now at 30,000 plus, and the gold market has been the victim of this paper manipulation. Gold competes against the integrity of the US dollar as the world's reserve currency, petrodollar. Gold has been artificially depressed in the price by central banks and hedge funds using the paper market to short gold futures. Debt is now more than 100% of GDP in many countries, which also makes gold and silver that much more desirable. Bitcoin is great, and I congratulate those who have done well with it. However, it has a long way to go before it is a currency. It is not for the masses. Investors are looking for an alternative to the US dollar, and they are flooding into Bitcoin. At the Equity Management Academy, we believe far more in the long-term value of gold and silver, which have been assets for thousands of years. Bitcoin, probably a small percentage of your assets, should be a small percentage of your assets, but I don't think it would change the trust most people have in gold and silver. Anytime we had monetary collapse or gone to a fiat currency, it has been disastrous, and we have gone back to gold. The question is whether gold will have a role in the future monetary system. Will we go to a gold-backed currency again? It would be interesting to see what happens unless the paper currency is backed by some kind of natural resource or precious metals like gold. Then the same thing is going to happen over and over again. Governments print more and more money supply, and the fiat currency is worth less and less, and it is virtually worthless. The IMF is talking about the SDRs potentially as a virtual currency, but they are already doing that exchange to exchange funds between central banks. A central bank's going to introduce a virtual currency? We're at the beginning of a new monetary system, which will still needs to be sorted out. The key is going to be who has the most gold. China, Russia, and Iran have been purchasing record levels of gold. No one knows how much gold China has. These corrections that we get in the gold and silver are contrary to the fundamentals and the overall sentiment of the market, which is extremely bullish long term. Buy the corrections and hold for the long term. It is a critical way to protect your portfolio from the devaluation of the US dollar. The longer the economy stays shut, the worse the damage. The longer the US government takes to supply critical stimulus, the more harm to the economy. We're going to see some more recalibration of the US and the global economy. A lot of jobs need to be created. In 2008, the problem was that all of the quantitative easing went into the central banks to pump up their balance sheets instead of into small businesses, Main Street, to create jobs. The central banks were supposed to loan back to Main Street, which never happened. Big companies borrowed at zero interest and bought back their own stocks and made fortunes, while Main Street suffered. The gold market has a long way to go to adjust to its mean in relation to stocks, crude oil, and the debt. If you had a chance to buy this correction in gold, congratulations. Gold is trading the opposite of the sentiment. You follow the herd, you're going to get slaughtered. This is why I use the VCPMI. This was published in Associated Press and all of the wire services this morning, and I'm sharing with you simply because I think it's an important topic that we're dealing with right now. Is how do we interpret what seems to be developing across the board in terms of a shortage of supplies. Trading quietly now. Gold and silver are gaining the gains here. One of the comments I made yesterday was about copper. The copper is breaking out. 406, and it's in a fast market condition. Just breaking out. You know, we were at 384 just a few days ago, and it's up over 20 cents in just the last few days. So definitely something is going on in precious metals, palladium, platinum. The most liquid markets are the ones that I'm trading here. Gold primarily is the most liquid markets, but we use the direction of the gold market to recommend accumulating derivatives underneath the market, like Nugget. Nugget is extremely oversold. JNUG. These are double X velocity ETFs that are highly volatile. They're good to trade the market short term. And these instruments is a good way to manage, you might say, the margin risk that a future carries overnight. SILJ is the silver investment trust that follows pretty much the futures volatility. GDX is the VanEck Vectors Gold Miners share, which also follows the price of gold. And these are securities, these are shares, so you can buy and hold, you can buy them cash value, 1-to-1, delta, and hold on to them. These levels are tremendously oversold. 30, 35. This is where you want to accumulate these kinds of assets for your portfolio. And this is what I'm pretty much I'm doing myself, and I'm recommending my traders to, whenever especially down here, to prepare for a reversion to the upside. And we've covered the short side of the market. So I'm kind of excited about the expectations that we have, and that pretty high probabilities that we are making some kind of a major bottom here, which is putting the short players here, at risk, as I said. So it's going to be interesting to see how this resolves. Copper is it's up 4%. It's just breaking out in a big way. Let me share this part on the report that we published yesterday. Gold and silver are volatile today. Silver made 28.07 high overnight, and it reverted to 27.15. We saw a move of about $1. Silver is in the limelight because of the short squeeze that Reddit and Wall Street Bets highlighted a few weeks ago. Everyone seems to be anticipating the short squeeze to take place. And the market, however, never does the move when you want it to, or it's convenient for you. The fundamentals in the gold and silver are extremely bullish. There is a shortage of physical silver and gold supply. One of the mints is running out of supplies. This was a report that was published by SLV, admitting that trouble resourcing metal and vulnerability to dramatic short squeeze. The amendment warns that the fund now may be vulnerable to a dramatic short squeeze like the recent short squeeze in GameStop shares that caused a worldwide sensation. So we're getting signals, signs that there is trouble in the cash market. And the VCPMI is guiding us through it. Silver came into that area where our variable changing price momentum indicator said to take profits around 28.07. Then we reverted back to the mean, almost to the weekly buy one level of 26.76. It broke the daily support levels of 27.48. After the stop losses are taken out and the nervous Nellies get out of the market or are stopped out, we're looking at the market to close above 27.32, which activates the VCPMI buy two level of 27.29. This is 27. This mean is 27.64, which becomes the target of 27.29 activated. There's a 95% chance that if 27.29 is activated, then the market will reach the mean 27.64. And if it closes above 27.32, then it is a daily confirmation of a buy trigger. $27.71 was the high today. That's pretty good, I must say myself. Within a few cents, within a 10% margin of error, That's how you lock in your trades. So this is a very specific structure. And I think the only thing that is important is to be disciplined, you know, about following the signals, not get carried away with the greed factor, and let the market tell you where it wants to go. Follow the money. We are seeing some interest above 27.48. Now that has become support. And this signal is activating 27.88. The weekly 27.89. These are the targets, the remaining targets for the day. It's probably going to be a quiet morning this morning, consolidating these gains in silver and trading, pretty much at these levels here, the supply and demand. We continue to see some buying interest here moving up in silver. So we'll keep an eye on, again, seeing how the market reacts at the targets of 27.88 to 27.89. 1787 is the next target for the gold market. We're looking at 1787, the sell one level. The sell two level is 1799. We are activating buy triggers again in the gold market. I just want to let the market, resolve this level here by itself, where I'm comfortable where we are. I'm recommending my traders to hold on to the position, hold derivatives long, and just be patient and allow for the market to shift into the next trend direction, which I believe is going to be to the upside. The ultimate target that I believe needs to be accomplished in here is the upper end of this trading range of 1784. I think we saw the bottom of the trading range at 1759. And I think the upper end of the range is 1874. So we're looking at a $200 potential rally. The trading range is 1759 to 1874. Now that we've come down to test this lower end of this range. And again, this is something to point that every time we come down here to these levels, we get reversions back up. We identify buyers at this level. So I think the market is telling us strong hands are buying the market down here. Any nervous Nelly, or pretty much got stopped out at all these levels here until the capitulation again, I believe, was last night at 1759. Be prepared for volatility. So don't overtrade. I recommend if you're day trading, don't overtrade more than you can handle just because the signal looks great or the code tells you to buy. It's not 100% guarantee. Nothing is. It's a probability model. And so if you get 80 within 80% or 70% of the move of the trading range, like last night, 30%, 30-cent move, you take out 70% of that. That's going to be a nice day trade or overnight trade. So manage according to your profile. Always have a fixed maximum risk on the trades that you do, regardless, to protect the principal and use the VCPMI as a guiding tool for you that identifies the extreme levels of supply and demand, above the average or below the average. And so as a self-directed trader, obviously you want to buy below the average into the blue zone, which is what happened last night, and take profits above the average, at the extreme above, ideally at the sell to, but often we don't get to that buy to or sell to. The sell one or the buy one are the most active levels from a probability point. From a percentage factor, I would say to you it's about 80% sell one and B1 are traded most of the time. So the way that I'm trading here is a very systematic approach to the market, regardless of the fundamentals, regardless of the chatter. I use the structure provided by the VCPMI AI, which is written in C++, coded language, easy language in TradeStation. And I'm sharing this with you here, how I'm executing it, showing you pretty much how the algorithm identifies trigger points, entry points, and targets. Continue to hold your long, core position. And again, let the VCPMI guide you. Thank you once again, everybody, for the opportunity to share this information with you. And I hope that you are benefiting by this every day that you come here. Have a great weekend. Be safe. Stay long. Be patient. I'll talk to you soon.
The risk of loss in trading commodity interests can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition, and considering whether to trade or to authorize someone else to trade for you. Past performance is not necessarily indicative of future results.
Steve Collegian here with John Najarian, folks. We're at